Hi, hello, welcome back to my channel, World Through Veera. Let us see, can we still invest in gold? Gold need to be seen as a long-term investment or just ornamental emotion purchase? First, let us see gold rates in terms of rupee for last 100 years. Why I am telling this 100 years? We can able to see what absolute percentage of returns gold years given on yearly basis for this 100 years period. It's approximately 8.5 to 9.5%, including profits we consider. Okay, then now we will break down from 1925 what will be the gold rate and today what will be the gold rate. In 1925, it's approximately 18 rupees. And if you see 2025, it's almost end of December 2025, it touched of 1.2 lakhs plus. So if we see returns in absolute terms for the 100 years, it's almost 545 times without inflation adjusted. In CAGR, without inflation adjusted, it's little more than 9%, and with inflation, it's between 4 to 5% CAGR. It's a good. If we see inflation adjusted, after that also returns are 4 to 5%. It's a very safe and it's a very best returns. And your investment is always been protected in a gold. Even any worse times or geopolitical issues or war kind of situations, pandemics, the gold is going to be a glitter material for everybody and including central banks. When they buy on these circumstances, they will buy gold more rather than the dollar or any other currency which they are going to do the trading for the commodities which are required, which they are importing. Let's simplify and see how gold is performed from 2000 onwards. Gold and silver are commodities, as we said. One should not see only these are the for wealth creation. They should be part of their investment with 10 to 50% in overall portfolio. Why I am telling this is going to balance your risk in case of any unwanted situations going to happen, a worldwide disturbances or within the country any economic issues or political issues, the markets are going to fall. There people may lose their investments in equity markets. To safeguard this, some extent of their money should be in fixed deposits as well as in gold, especially. Silver is recent days it is gone up. Silver is not treated as a ornamental worldwide. When people buys gold for an ornamental purpose, is a more not as an investment, but it's as a more as emotional attachment. And they consider gold in case of any emergencies or any unforeseen requirement or financial disturbances they are going to face, the gold will come into rescue for always. Ornaments, they can keep it and take the loan, but where they are holding as a coins, they can sell and take the money. Nobody takes the coins to keep on and taking the loan. Ornaments, that way it will be very useful, and in the house ladies can use those ornaments and enjoy that because it's emotionally attachment and emotional bonding with the ornaments. It's always be there. From 2000 to 2025, approximately gold price in India has gone from roughly 4,500 to 5,000 per 10 grams to around 1 lakh plus per 10 grams, varies by year and months, but in general that's about 12 to 14x growth in 25 years. Annualized returns are roughly 10 to 11% per year in terms of INR. But if we see this 25-year journey was not smooth. Big rallies 2008 to 2011 and 2020 and 24, crisis, inflation, geopolitics, pandemic, etc. Long dull phases 2012 to 2018, almost flat in real terms. Conclusion, gold moves in cycles. It's not fast growth asset like equities, but gives share of value plus crisis hedging and inflation beaten returns. This is the thing people has to understand. People has to see if the anything is giving inflation beaten returns first, as we talked, 4 to 5% after inflation adjusted, then it's a best investment in long term. Short term, you will always see a volatility, and the price sometimes gets stagnated, or it may go down also, as we compared already 2012 and 2018 in between. Gold normally increases the price when world economies are in a problem or any geopolitical disturbances. If everything is going smooth, everything is fine, equity markets, everything is well, then gold will be not going to give you much returns. But as we discussed, in a long run, gold is definitely a best investment. Don't keep everything in gold. As we said, if you want to invest 100 rupees, out of that 10 to 20% only you keep it in gold, and some extent silver you can hold it in the hard form of silver. Now ETFs are coming to picture. People are investing in ETFs. Irrespective of physical demand, ETF demand is gone up. In recent days, if we see silver from 80,000 to it touched almost 4,20,000 in hardly 1 year, or little bit 1 year more than that. From 4,20,000, it has come down to 2 lakh plus in a few days time. So it's adjusting and correction is taken place. Eventually, silver may go up, but I don't recommend to invest more into the silver. To balance it, one can invest in gold and silver ETF combined together. Few mutual fund companies, mutual fund houses are offering this kind of ETFs. People can choose those. Apart from that, physical holding of the gold, hold some extent of the gold coins along with you, so that in case of any emergencies, you can sell these gold coins very easily. Within minutes of time, you can able to get the cash. Ornaments will help you to take the pledging those ornaments and taking loan from banks and small financial institutions which are doing the investment kind of things. Please hold. Let us see short term versus long term and gold versus equity versus fixed deposits now. Over long periods in India, equity, Nifty or Sensex return 12 to 14% CAGR, but very volatile. Gold 10 to 11% CAGR, lower volatility and safe havens for investment than stocks. But still, it's a cycles. Sometimes gold price gets stagnated or falls, and it takes its own course to recover and give a profits. People should be in long term for gold investment, so that definitely they can able to make money. Gold usually beats inflation but underperforms equities over a very long periods. Equity market, if you are investing 100 rupees, there is a chances of losing your 100 rupees or some losses in that 100 rupees. Why we people lose? When share stops trading completely and company goes out of business, then you lose 100 rupees. But your 100 rupees may return you even 100x, 1000x also. Your 100 rupees may become a 1000 rupees or 10,000 rupees or 1 lakh rupees also. If you see the shares from the last 20, 30 years, it's given like Wipro, if you take Reliance Industries, MRF Tires, so on and so on, then you can able to know what equity can make you, or equity shares can break you. In real power, diversification, protection, and bad times, gold is going to help you. As we talked, how gold one has to hold. Gold in a three forms they can hold. One is ornaments, second one is a gold coins, and recent past it is a ETFs. It's just like a equities. It's just like a mutual funds. You can buy anytime. You can sell anytime in the exchanges, and you will get back the money T plus one within 2 days time into your account. This is one of the best form to holding a gold in a digital form, so that you don't have to be worried. The securing the gold, keeping, because gold rates are gone up. If you keep at house also, it's going to be a difficult if it is going to be theft happen or anything kind of thing. So maximum try to hold apart from the ornaments and few grams of coins, rest all an ETF form. You don't have any limit also, but whereas a physical gold, a government of India has set limits for every individual. Married woman can keep up to 500 grams, and A man can keep up to 150 grams. Unmarried, a woman can keep around approximately, I think, 200 plus grams. I'm not very sure on that front. So keep investing in ETFs. As I said, silver don't go only as a silver. Even you want to go silver, keep only 5% of your portfolio. You should have your money from 50 to 60% in equities and equity mutual funds, 10 to 20% in between gold and silver, maximum into gold side, and rest into some real estate investments. Most probably it should be a better of rental giving real estate. That will be always better. If you want to hold land, I always suggest hold a big part chunk of land in an agriculture form of land. It will be safe always, as well as 20 to 30 years it will 5 times 6 times the price will go up. So you will be having just little bit more than the inflation beaten returns only, not more than that. But that time it is going to help you for your kids, higher education, or marriages, or your own retirement kind of things. Once a land you convert into rental giving assets, it's always best. But real estate is always illiquid. One cannot sell very easily, or they can't sell part of that real estate case. But whereas equities case, it's high volatile. Mutual funds depends on the risk appetite. You can invest. It's a government securities and government bonds. It just gives more than a 1% more than a fixed deposit, but it may beat, it may not beat inflation. Whereas if you go to moderate risk to high risk, you can able to get 10 to 12%. At high risk, high return categories, if you are able to choose funds properly and be very long in that, then definitely you will be able to make. Here, I don't want to go into equities or mutual funds much. Here, we are talking about gold. So, please keep investing gold regularly and ensure every year, whatever the amount you are saving, out of that 10 to 20% in between, you invest in gold. Whatever minimum requirements and as the government permits, that much only you hold it in a physical form of gold and silver. The rest, it will be always better to hold in digital form of gold. That is ETFs, which is advisable for everybody. If we just see future forecast for the gold, in absolute terms, no one can predict. If anybody is predicting, it's wrong. As we discussed, in long term, gold is always beneficial, but in just in current situation, current scenarios of the world order, let us see from 2026 to 2035 how gold is going to be perform. As I said, no one can predict exact prices, but we can talk in trends with logic. Factors supporting gold long term: global uncertainty, wars, geopolitical situations, trade conflicts, world order change basically. High government debt worldwide, currency depreciation over time, including INR, central banks buying more gold, inflation protection demand, hedging of risks of the world currency, likely return range. Gold may give you around 8 to 11%, maybe. That's where I'm telling that. CAGR in INR terms for next 10 years. A couple of years, it may be a negative also, or it may be a very flat also. Hope it's clarified, and gold will be always a safe haven for people for investment as well as emotional attachment as an ornaments. Keep investing, keep regularly, keep accumulating in form of digital gold through ETFs. Thanks for your time. Thank you. Take good care of yourself. We will discuss in next topic. Until then, bye bye. I'm VVS Reddy, World through Veera.